Welcome to another episode of The Intelligent Speculator, where our purpose is to provide insights into economic and market movements that have been successful in helping us grow our wealth. And now, let's hear from the hosts of our show, Jesse Sanders and Lathan Fritz.
Hey guys, I'm your co-host Jesse Sanders, and with this being our first episode, we wanted to lay a framework for what this podcast is all about. So on today's show, we're going to touch a bit on macroeconomics, a little bit on currency trading, long-term debt cycles, and get to hear how Lathan acted out on his belief that we were heading for a crisis and how he was able to significantly profit at a time when most investors and markets as a whole were in rapid decline. So let's jump right in. Hey Lathan, how you doing today?
I'm doing well, Jess. How are you doing over there?
Man, all is well here.
Yeah, good deal.
Excited for this podcast, and man, I wanted to. You and I have chatted on this a whole lot, but for those that are listening, what is your main purpose or objective in doing this podcast?
Well, I think the main reason for it is I have come to the realization that, throughout my relatively short life, that a lot of the financial advice or, common knowledge out there in many ways seems incorrect and is not really geared towards any kind of significant wealth building or preservation or anything like that. And I kind of through both my studies and through actually trading the markets, I believe I've come across certain methods and systems that have significantly outperformed, average average investment returns and your typical advice out there of just don't try to time the markets, buy in for the long haul, buy stocks, bonds, mutual funds, and be diversified in that. And I've just noticed in most cases the mainstream advice just seems to be wrong, and most people follow it, but most people are not very wealthy, like Ray Dalio or Warren Buffett. And so more than anything, I've wanted to study what those individuals do and apply it to my personal finances. And so I think more than anything, that is what I want this podcast and this community to be about, is, actually thinking for ourselves and self-educating ourselves on financial matters, macroeconomic issues that affect markets, and how we can position our capital to capitalize, as it were, and both build and preserve wealth that far exceeds what your mainstream investor will get following the basic advice that's out there.
So kind of the basic kind of safe tactics advice that mainstream's following. You're wanting to look much more critically at the lives and decisions that these other great investors have made, and then share what you've learned over the last decade or so of doing this yourself, and kind of have a platform for us to share lessons you've learned from studying others and lessons you've learned from doing it yourself. Kind of have this platform be dedicated to just that.
Yeah, exactly. And I would even kind of push back a little on the safe advice that's out there, because I wouldn't say it's necessarily safe. I feel like the Main Street advice out there is not only in many cases gearing someone towards underperforming average market returns, but in many ways does not protect them from a risk standpoint, which I think if you look at any of these top investors or traders out there, that is their number one concern, is how do I protect what I have and not lose it before they even think about going out and trying to make another dollar. Is how do I minimize the risk that I have over my financial assets? And so I would even say, it has nothing to do about being safe, as more as trying to find what's the wise thing to do and what should we be looking at first as a priority.
For sure, for sure. Well, man, I'm excited to jump into a lot of this. But guys, as we are in this first episode, I wanted to set kind of a framework, and we've heard from Lathan kind of what he's looking to share. From my personal experience, I've grown up with Lathan. We were friends since 5-6 years old. Our dads were in law school together, way back in the day. And as we've gotten older, interests have changed. I pursued basketball more at an early age and led to college education and then a career over in Europe for a few years. Lathan had different interests that led him down a different path. And personally, I've gleaned from these, at the time, seemingly obscure interest that we would just talk on. But, man, it was really valuable information. I was getting, information, articles, books to read, his opinions on things that I would not have come across otherwise. And I really benefited from those conversations, from those articles, from the opinions that he shared. And my purpose with this is to just dive deeper into some of these topics and this stuff that, may not be readily available to all of us out there, but provide some actionable information that has helped me in the past and hopefully will be helpful to you guys in the future. So Lathan, jumping in. Anybody that follows you on social media, maybe they're in the Facebook group, The Intelligent Speculator, maybe they know you from a distance, they may see these faceted sections of your life. This guy's interested in politics, interested in macroeconomics, world markets. They'll see a tweet about this or an article about a coming election. From a financial perspective, are those entirely separate interest, or is there kind of a rhyme and a reason correlating those things? Like when you're sharing articles within our Facebook group or even from your own personal platform, what's the kind of lens that you look at all three of those different interests when you are managing your own financial assets?
No, for sure. And I would say, I am very, my passion is, history, politics, and economics, some markets. And, it's not just that I think that those are, I do not believe they are necessarily like three completely separate fields of study when we're talking about from a financial perspective, because they all kind of intertwine with each other. So, you could have someone who just studies politics, someone who just studies history, and someone who just studies markets. But what I think you would find is you actually get a better representation of all of them when you see how they interact with each other in real life. So if you look back at history, a lot of history is made up about, important people, politicians who kind of take the headlines. But a lot of that had to do with kind of what was going on economically in the day, like what was happening during markets, where, whether it was an economic crisis that caused this event to occur, or it was a economic expansion that allowed this empire to be built. And so when you actually, I wouldn't say like, it's not that I just have these like these random passions or areas of study. More than anything, it started out with kind of like a love of history. And, when I was reading about history, I kind of realized like, history is kind of made a collection of all these different kind of like political figures, these political leaders. And then, a lot of those political leaders and figures were kind of, their behaviors were dictated by what was happening economically during that time period. And that's where I also kind of found I was able to also kind of begin to see how markets and different financial instruments actually reacted very similar to different things that had occurred back then, that if human behavior acts in the same way today, the same thing will be the end result. So you'll have that cause and effect relationship. And so,
and was it kind of a layering of those three, kind of looking at it from the historical, then the political, and then kind of the study of markets overlapping in that same time period?
Exactly. Yeah, exactly, Jess. And so it was one of those things where it kind of started with just, studying history, and it was like, oh, this political thing's pretty cool because that's, interacts a lot with, historical observations. And then you realize like, oh, the political figures did this because of the the economy, and you're like, oh, this is all really cool and how it interacts with each other. And then it just so happens that, you can, play the markets today and kind of use that analysis to do really well financially because, while history doesn't repeat itself, it constantly rhymes, and you can have a pretty good idea of what's going to happen in the future. No one has a crystal ball, but you can have a pretty good idea of, if the Federal Reserve is going to raise interest rates, you can have a pretty good idea what the outcome is going to be after a few months or a year or two as a result of that action. And it's amazing how these cycles just kind of repeat themselves. And then I discovered you could actually make a career out of it, and it could be very financially rewarding. So it was kind of like, for me, it was the perfect of all worlds where, hey, I get to study this stuff and it's a passion of mine and also make a living off of it. And so it was a really cool combo.
That's what I'm interested in because, the passion, the interest, you have that. For guys that don't have, the interest in, these topics, give us an example. What's a time when those, three kind of interest overlapped and there was an opportunity that you could trade and profit from those interests, and you saw an opportunity both from your historical perspective, and you saw an opportunity in the markets to enter into a trade or take an investment?
Well, I would say the most recent one is a prime example. I mean, we're May 12th today, and so obviously we're in the kind of middle of the global pandemic of COVID-19. And we saw markets crash up to one point of up to 40% in the middle of March. And it just so happened last year, in December of 2019, I wrote a report called 2021 America's Greatest Depression. And in it, I saw there was a kind of a realignment that was coming into the economy because we had reached what is called a peak debt. So in our credit cycle, you have a bunch of different credit cycles. So, your average 5-year economic expansion followed by, a 1 to 2 year economic contraction, and they kind of feed off of each other and build. Well, about every 80 to 100 years, you have these significant financial resets as a result of a long-term debt cycle. And when I kind of observed that we were kind of reaching that peak debt cycle, which occurs to about once a nation reaches about 200 to 300% of debt to GDP, and when you add government debt, corporate debt, and personal debt, we're about there. I kind of saw.
That's when you were adding all those up in end of 2019. You were saying, hey, between all of these, corporate, government, individual, that's when you're saying, hey, we are at this peak debt cycle.
Yes. And then, and at the same time, we were, at historically low interest rates, and we had just come off of this kind of, huge bull run that people were like, oh, it's going to, go on forever. And all of these patterns were very, very similar to what had happened in the 1930s. And then you can even look back, very similar to the 1830s and the 1700s. And like I said, kind of like every 80, 100 years where you have these big resets. And so when I saw that, and I also saw in the price action data, so I also study like prices and see where buyers or sellers are going and what currencies they're going into, you could see these like long-term bear markets in like these commodity currencies. So when things are good, people go into commodity currencies like the Australian dollar, New Zealand dollar, and Canadian dollar. And then you had these safe haven currencies like the Japanese yen and Swiss franc that were having these long-term kind of strengthening components to them, even though those safe haven currencies had negative interest rates. So I kind of put all this together in kind of like it was an overlap, and I was like, this is like a perfect storm that's coming. We're going to probably see a very, very severe economic contraction, and there's going to be a huge bear market in the a huge bear movement and sell off in the equity markets. And so
you see the perfect storm brewing into 2019. How do you, Lathan Fritz, as an individual, act on that information? What market do you go to? How do you place a trade? What are you doing to act on that information?
Well, for this particular one, I was actually looking kind of like I had mentioned earlier, where I was looking at these commodity currencies and how I could short them against these safe haven currencies like the Japanese yen and Swiss franc. And also the British pound, even though it's not a commodity currency, just because of Brexit, that currency has shown some significant weakness. And so I was also looking at a potential opportunity to short that against the yen, because I knew if Britain was hit with any kind of serious financial or fiscal issue, or there was a global economic contraction, they would be suffering pretty bad as a result of it. And so really kind of went into the year looking at I'm kind of looking at these instruments for price action to tell me when is a good time to short these commodity currencies or weak currencies against these stronger ones that people tend to go into when they're scared for their finances. So the reason that the Japanese yen usually gets significantly stronger is because people like the Japanese bond market. And so when they're kind of scared, they'll liquidate equity positions or liquidate assets positions, and they'll move into the Japanese bond market. But to do that, you need Japanese yen, and so people will buy up the yen and sell other currencies off in order to get those bonds. And so that's what I was looking at, and then kind of went in the year saying that this is what I'm looking to kind of on how to capitalize. And it happened a lot sooner than I thought it was going to. I thought maybe I had till the end of 2020 before something really big would happen, but it came in the end of February. So.
And so when you placed those trades, though, you were anticipating potentially being in those trades for as long as a year, and then they closed out because when you'd entered your take profit, the markets moved in your direction way quicker than you foresaw happening.
Well, I wasn't necessarily looking to be in those positions for an entire year. More than anything, I was looking for the price to tell me when, like I said, because markets don't go straight up and down. So what I was looking for was where's the moment where there's going to be basically just sellers. All the buyers will have left the market for those commodity currencies, and only sellers are left. And so really, I was more than anything wasn't looking at for necessarily holding these positions for a year. I was looking for when I was going to see that strong signal in the currency markets, and then take my position. And I would say typically, most of my positions the last several weeks to maybe several months. But the positions that I entered in the end of February were, in many times, they were over in days.
So you were instead of being in the trade for a year, you were thinking you might be monitoring these trades for a year, but the time you entered, they'd most likely be a few weeks. But in reality, the monitoring phase was shrunk drastically due to COVID-19, and then the trades filled just due to all the volatility in the market. Is that why it filled so much quicker than you were kind of used to seeing?
Yeah, and I would say, and again, it wasn't necessarily that the orders were filled, because I hadn't really put in a pending order at the beginning of the year. Like I said, once I saw the signals take place, there was a little sideways action. I think one of them actually took about a week before that pending order was actually triggered, because that's when it broke below a certain level of support. And then when it broke that level of support, yes, a lot of those trades moved very, very quickly. And in one case, one of the trades that I had placed actually closed out in about 12 hours. And again, wow. And these aren't, and that wasn't because I had a very close take profit, or I'm trying to day trade. It was because the market had moved several hundred pips, which to your average listener that might not mean anything. But to give you an example, over the course for some of these currency pairs, it would take several months for a movement of several hundred pips to occur. And pip is simply stands for point in percentage. And
you saw that in a 12-hour time period.
In a 12-hour time period, in a movement that would usually take several months, and that's just because because of the volatility that we saw. There's the markets across the world, equity markets crashing, and then some currency markets crashing against others, while others strengthened significantly.
So for the guy that's not the listener that's not an avid forex trader, what was we talked about monitoring risk, what was your risk exposure had these trades gone against you? How much of your account were you risking on these trades? And you mentioned trades, so are we talking 2 trades, 5 trades? And finally, kind of what was the return brought in by the trades that did go in your favor?
Yeah. So it was several trades, and there's a few that I did 1 to 2% risk, but then I also kind of basically scaled in as the market went in my position.
And when you're saying scale in, that's once it hits that you're going to you can move your take profit up and your stop loss. If the trade is going in your direction, then you're simply improving your take profit and your stop loss so that you're kind of.
So I never increased my risk, but I increased my potential for profit. Yes.
Got it.
So some of these trades were 1 to 2% of risk, and the most that I ever risked on any of these trades was 4%. And by the time all the dust settled, it was around about a 25% to the positive in a 6 week time period.
Wow.
And
25% on the account as a whole.
Yes. Mm-hmm. Yeah.
Wow. Okay.
On my account, and again, not betting big on any specific trade, just kind of, like I said, more than anything, just being careful with my risk and letting the market do the work for me and letting it take it to my profits, to my take profits. And so net after all was said and done, personally, my account did over $1 million in a 6 week time period. And
in profit.
Mm-hmm. Yeah.
Wow. Okay. So you saw the kind of perfect storm brewing in the end of 2019. You were monitoring kind of some potential opportunities that you saw. You placed some trades, and then in that 6 week period, again, things were expedited due to the volatility we've seen in the markets. But end result was a extremely profitable 6 week period.
Yes, yeah. And kind of in a similar fashion where it's like, most equity markets around the world, they were at one point as low as 40%, and they've recovered since then to, I think they're only maybe down 15-20% for the year. But yeah, it was during that volatility and kind of waiting for it, and for that perfect storm to happen, and it did. And now I'm just kind of doing more monitoring and seeing the muddling happen. But I kind of see the clouds gathering again for another big major moves that are coming. So.
Well, man, that's awesome. I've got a lot of questions I want to get into, but unfortunately we're out of time for today. So I'm really excited about this podcast, excited about what's to come and other topics we're going to get into here soon. So thanks for joining us, and we'll talk here soon.
Sounds good. Thanks, Jess.
Thank you for listening to this interview with Lathan Fritz and Jesse Sanders. We hope to see you next time, and remember to like and follow The Intelligent Speculator on Facebook, Twitter, and Instagram, where we are posting insightful nuggets of economic and market movements. And if you would like to get exclusive information, feel free to join the Intelligent Speculator Facebook group. Good day.